like to ask a couple quick questions. So if you could answer those for me, that would be wonderful. We'll just take a couple of seconds to do this. And one last question. What type of trader are you? All right. Well, thank you everybody for participating. Again, this just helps me know where everybody's coming from, if you will, and hopefully direct the presentation a little bit more today. So with that being said, let's get into our topic today, which is understanding the markets, understanding why price goes up and price goes down, and how Apizones can help you better understand why the markets are moving. All right. So just a little introduction of myself, and just so that you can put a face with the voice. My name is Gabriel Brent. I am the developer and trader behind Apizones. So it's just a little bit about me. Apizones is really the apex of my own personal trading journey, and we want to make sure that during our class today, we are giving you some good golden nuggets that you can take home from today's session and employ in your own personal style. So we're going to start at possibly a different area than what you're used to seeing. We're going to start with the idea of events. I'm a programmer, so and in programming we do a lot of stuff with events. When does this action happens, I want to do this. When your mouse rolls over this, I want to bring open a new page, or who knows what. So as we look at this idea of events, it really is a different starting point than you might see out there, but it really is I think a great starting point, because at the end of the day, when you are settling up with your broker, what you really have there is a list of trading events, your wins and your losses, a green day or a red day. And what this graph represents is statistical probability, and I think that is a wonderful place to start. So just to explain a little bit about this chart, basically you'll see 70 down to 100%. That's a really high winning percentage, okay? And then over here on our columns, we have 2 losses in a row, 3 losses in a row, 4 losses in a row. So out of a sample size of 100 trades, given whatever winning percentage, whether it's from 0 to 100, from 70 to whatever, this is the percentage of, the percentage of losses or a losing streak happening to you, given any winning percentage. And I thought this was really interesting because it kind of starts at the end of the day, or at it starts kind of at the end, but in a really good way. It really looks at the statistics of what we're doing. It starts at what is core, what do we really need to understand about ourselves and about our own personal trading style and our trading strategy. We do have a trading strategy here at Apizones, and I want to make sure that is clear. But the probability and the outlier probability, I think, is important. So even if you're winning, let's say, 20% of the time, realize that you could statistically have 5 losses in a row. That is statistically very probable. Okay, so without diving too much deeper into that idea, we're going to shift our focus from trading events into market events. And what is a market event? Anybody have any ideas out there? What am I referring to when I say market event? Okay, so this is a class. We do expect people to participate, so if you guys have any thoughts, let's go ahead and see them. You can write them out in the questions box, and I'll make sure that I see them. Okay, news events. Well, not exactly what I was going for, but yeah, that is an event. Um, Higher high, lower low. It looks like we have some people from our class here, so that is cool. Thank you guys for attending today. All right, well, I'm going to expand that previous answer. Basically, what we're looking at as far as events is an idea of price action doing something. Okay, what are the bars doing? Okay, I don't care about any fancy indicators, oscillators. I want to know what price action is telling me. What do the bars say? Because they do make sense when we can understand them, and when we can put them in context. Okay, so when price breaks below this point, this down here is a lower low, and this down here is a lower low. All right. Now we understand that price is broken below these and put in 2 lower lows, and we can kind of understand what that hopefully means. But it means price is trending down all the way to this point, and then we can see price consolidating, and then it expands up out of this area. Okay, so whenever price does one of these market events, or whenever price starts to consolidate, we're looking to understand the ebb and flow. How is the big institutional players going to jump into this market? Where do people think that this is a wholesale price or a retail price? Those are all good questions, because we have to look at the markets as the masses look at the markets, as the big institutions look at the markets. That's what's going to really give us our edge. Not understanding an indicator calculating over the last 20 bars, but really understanding what moves the market. Well, if you remember back to your high school classes, I'm sure that you'll remember the phrase supply and demand and the shifts of supply and demand over time. So I'm sure that you probably remember some supply and demand curves looking something like that, and we have time and price going along, and you can see the shifts in between supply and demand. Well, guess what? Your high school economics teacher was actually a really cool person, and they really had something good to share, and we're going to expand upon those ideas, because when we look at the markets, when we look at price action of the markets, we can understand this ebb and flow of supply and demand, but we have to look a little bit more carefully at things. Where are the big institutions coming in? Where are they getting out? They can't all get in and out at the same point, so they have to go in slowly and come out slowly, and those type of things. So as we look at the markets, what we're really looking for are these market events, and categorizing and recording these market events over time to give us an understanding of consolidation and then expansion. Okay, so, and by understanding the different phases of the market and understanding the supply and demand in the market, it gives us a better understanding of what's going on. Okay, so we're going to go ahead and apply the zones to this chart. And as we do so, well, we have a very colorful chart, but now this is very interesting to me that price seems to be touching a zone down here that wasn't on our chart, but 5 seconds ago or so. Now, what is that saying down here? Well, to me, because this level is in green, you see those two little green numbers beside the top and the bottom of that zone. It means that this was a reload into demand, okay, or support, okay? And if you notice up above our price, up above most current price, you'll notice all these levels in red. This is representative of supply or resistance, okay? So all of these zones are dynamic, and yes, it does make it a very colorful chart. The colorfulness and the zone width is there because that's what the market's telling us. And every single time the market fails to break a zone, boom, 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 it's bouncing off this level, boom, bounces off the level. That gives us an insight as to and the color change of the zones gives us an insight to how strong these levels are. The more times price bounces off of a level, the weaker and weaker it gets. Okay, so we have something called the money bounce, which is actually demonstrated over here again, just to the left. Okay, and you can kind of see how that looks. This is a money bounce. Okay, so all zones start off with this aqua color. And then when price fails to break a zone, it turns to this nice blue color, okay, and that's called the money bounce. It's what we love to capture in the APA zones community. All right, so I hope that makes sense because we're going to go right along here and get into some more interesting topics, okay? Now, as you may have heard me say, support and resistance and supply and demand were in the same sentence, and for all you nerds out there that like equations, here's an equation for you. Support and resistance plus time equals supply and demand. All right. So I know that's a really simple little equation, but how do we apply time? And I'm going to make an assumption here that most people know what support and resistance is. But if you don't, then we'll get into that in just a little bit, okay? So this is how I apply time to everything, okay? How long a zone has lasted on your charts, what time of day a price interacts with a zone, and higher time frame confluence, okay? So what we're really trying to do with APA zones is to keep things simple, okay? So let's avoid selling into the high of the day because we have a reference point as to where high is, okay? Let's avoid selling into the low of the day or buying into the high. We want to have an understanding of where these points are, okay? So that's really what we're looking at. We don't want to take every single level. And to be honest with you guys, not all zones are created equally, okay? We need to look at those time frame confluences. Where's the trend? How do we define the trend? Okay, things of that nature. So we do all of that stuff in the APA zones community, and a big part of the APA zones system is defining the trend. Yes, we know where high and low is, and we need to get on board. Okay, so how do we get on board? And we spend a lot of time talking about that. And there are several different ways to get on board. But I feel that a very simplistic approach is probably the best approach, okay? So if we know where low is and we know where high is, we buy low, sell high, and vice versa. It's literally that simple, okay? So we've been talking a lot about the y-axis, the price axis, but I don't think a lot of people talk about the time or the x-axis, all right? So I went ahead and did a study in time, and Well, this is what I found out, and I actually made an indicator from it. It's called the APA-Time tool, and well, basically, it turns your charts into a zebra with also a little color, if you will. The first 15 minutes, we also identify that portion of time as well. So at the top and the bottom of the hour, what APA-Time does is it looks to see if there is a repeatable event going on that we have observed over time. So we are looking for major extensions or major reversals or retracements to happen when the background is painted gray or green for that first 15-minute segment of time. Okay, so during the first 15 minutes, it does look like price reversed there, and then down at the bottom, looks like price reversed at the top of the hour. And that's the kind of stuff that we're looking for, so that when we put it all together, we put the X and the Y axis together, working in combination just like supply and demand, and understanding the differences in between supply and demand, support and resistance. It looks a lot like this, and we call this the APA tic-tac-toe system. Okay, so we're going to use both price and time and price action to see when pricing is bouncing off of our zones at the right time of day. And you'll also notice that there's a little green dot here. Now you may ask, Gabe, what is that green dot all about? Well, that green dot is all about price action, because understanding the bars, when I say price action, I mean understanding the bars. We want to understand the bars and keep it simple. We want to understand what are the bars telling us. The zones are all secondary. Understanding the price bars themselves is primary. Okay. The price bars, understanding these price bars help us determine trend. Okay, so those little green dots are representative of us being able to jump on board with a confirmation of price is actually doing what we think it should be doing at these times of day. And it's just a wonderful confirmation of price action and zone theory, supply and demand, support and resistance, all coming together as these dynamic zones are being formed, and we're seeing price action respond to this dynamic supply and demand that's happening on our charts. It's really quite cool. So that's the basic ideas and principles of what we're going to be talking about today. Now, there's a ton of information that we really need to cover, okay? Now, on the APAZone's website, you will find that type of community and those type of videos. Here's our main web page right now, and you can see a little bit of what it looks like. And we're also going to be talking about these APA products. So if you go to products and product comparison, you'll see these products here. And what these products are, these are just software products, but they all give you access to our video training in the back end, okay? So what we've been looking at, and with the basic ideas of the APA zones and the time zones, that's the element package. Yes, there's access to the video training library, workspaces and templates, to our Skype room community, and to our ongoing education throughout the week. But that's the element package. So you're really getting quite a bit just with education, all that free education built into this, okay? But we don't want to stop there. We don't want to just start there. We want to go the extra mile. Just like you saw the tic-tac-toe method working out, we really want to go the distance here, okay? So if you like multiple time frame confluences like we're talking about, that's in the generations package. Now, I'm going to assume that people know what I'm referring to when I say multiple time frames. So if you want to be looking at, let's say, 3 different time frames, so let's say a 5-minute, 15-minute, and 60-minute time frame, you can actually apply the zones so that you can see all 3 of those time frames all in one chart with this generations package. It's really just that simple. And that cool, to be quite honest with you. We also have the APA which is a fantastic tool that helps us define trend. Okay, so we'll get into that in just a little bit, because understanding market context, understanding that shift of supply and demand, that's key, that's paramount. Above all the coolness of the APA system, we want to be able to share with you how you can easily do that, okay? How you can easily determine market context and jump on board the trend, okay? So if you really want a package that puts all of this together, you're really looking for the methods package, something that just keeps it simple, you know? We like to keep things simple, you know, and just from my work with so many different types of traders over the years, the more we can do to keep it simple, the better. Being a good trader isn't necessarily about looking at the charts all the time. Being a good trader is understanding the context of what's happening and understanding when the market has told you to do something and when the market has told you not to do something. Okay? So we want to help you along that route, and I've actually trained several people to do that. So one of our really cool things is called the APA Mentorship. It's a one-on-one training. Now, I know one-on-one trainings in the trading world is almost unheard of, okay? And the reason being is because it's very time-consuming, and well, let's be honest. It's a lot of work, you know. Seeing a successful trader dedicate his time to helping somebody else, that requires a lot of work and effort. So, but that's exactly what we've done with this community and with the APA Zones community. Is we've shared stuff. We're paying it forward, and that's what the mentorship program is all about. So we hope to, if you guys need any help or anything like that, we hope to be the source that you can come to and say, hey, this is where I'm struggling, and we can say, no problem. This is what we found to help out in that case. So that's a little bit about the APA mentorship, all right? So in the hopes of getting a little bit deeper here, I want to take it to the next level. I want to show you how the magic works, all right? How we're putting it all together. Okay, so I'm going to let you guys study this chart or this slide for just a second. Okay, so what this is, just so everybody's following along, we have a 15-minute chart. This is my context chart, and we have a 500 tick chart, okay? So we have multiple time frames applied, so we're using the APA methods package, all right? And we have a little 6dm down here. Notice this little green line that's flat, and now it's starting to move to the upside here. That is the APA trender. Okay, and price started out below the APA trender, but the trender was still green, and it was reloading into our little 60-minute level, that little aqua line. So multiple time frames will come in a lot of times as just two aqua lines put together with a little 6dm on the top and the bottom. We'll get into that in a little bit later on. But knowing that the trend was up, okay, what do we want to do if we are in demand and the trend is up? Well, we want to buy low and sell high. It's really that simple. So that's exactly what we did here. And we'll get into some live illustrations of that, but that's how it works. Here again, here's the trender. The trender's painting our background this time. We've identified low. We've identified the Globex low, which may be something that not everybody here is familiar with, but it's a very simple concept that we do teach in our training and in our mentorship. So you can see the trender is green, and price is down here in demand, in this big demand zone, all right? So it is yellow. That means prices bounced off of it a few times. That one's yellow, so that means prices bounced off of it a few times. So guess what? We want to buy low and sell high. It's really that simple. So we see price reloading down here at low, and guess what? We sell up there. It really was that simple. And that's the same chart after prices made this move. On our entry chart, you can see the confluence of multiple time frames coming in here as price bounces into this nice purple zone and then moves out. Okay, so the smaller time frame chart, these zones are more of a support and resistance type of feel. So as price trends up, all of these levels are support levels, and you can see price bouncing off of these levels. Some of the levels, remember, when a zone is first created, it's aqua. Then as it bounces again and again on a zone, it turns from this blue to this yellow color, and you can see the trend is still going strong over to the right-hand side of our chart. So that's really what we're trying to do here. It is literally that simple of buying low, selling high with the trend. Okay, so that pretty much concludes the ideas and principles behind the software. Right now, we're going to get into the live charts, and we're going to go through some more of the software just so that you guys can see it happening in real. So let me go ahead and connect to some data here. All right. Let's bring over this chart. All right, so right now we have the EPA trender on our chart. I've turned off the zones just because I want to go through the awesomeness that is the EPA trender. That is this green line right here, okay? What the trender does is it helps us stay with the trend, even though we get major pullbacks sometimes, like this. All right, and when we get major pullbacks like that, it's not really that big of a deal because we have a good understanding of what's going on. All right, and the EPA trender was designed so that when we get the major pullbacks, it doesn't fake us out, but we keep with the trend. All right, so that's what we're trying to do here. All right, and you can see like how the trend went from red to green. So the EPA trender is a very special piece of software. It does go flat sometimes. When it feels that the market is consolidating, it will go flat. All right. So that's a little bit about the EPA trender. Okay, and you can see that it's been green here for the past several days, and looks like we are making new highs here. All right. So let's get a little bit deeper than this. Let's start with the APA zones generations package and the multiple time frame capabilities. All right, so now we're going to display on here the APA zones MTF. Okay, so you'll notice it says APA zones MTF 60M up here at the top. We've shown the active zones. We can show only the current zones if we like. And basically what it allows us to do is categorize from a 60-minute chart superimposed onto our 15-minute chart where is low and where is high. Okay, so that's what we're looking at. All right, so down here is low, and we can look at the 60M and the 60M together there, and they're both blue, so that's where the 60-minute level is. It's literally that simple. So all we have to do, if we wanted to check it, go over to another 60-minute chart, open it up, and you could see a filled in zone right down there. Okay, so that's literally what we're doing with the multiple time frame tool. All right, and we can have 3 or 4 different time frames sitting all in one chart. Or if we wanted to take out the 60-minute and maybe turn this to a 30-minute, we type in 30 right there in this drop-down panel, and then we go to minute, and it will load up 30-minute levels or zones on our 15-minute charts. Okay? And let's flip that back to 10. It looked like NinjaTrader might have been having an issue there, but looks like we're back again. All right, so, and we can only show the most recent levels. So what is the most recent levels that that are showing on our charts, and most directly related to where price currently is, or we can show all the levels on our chart. Okay, so inside that 60-minute level, we know that there's a 30-minute level right down here. All right, so it's literally that simple. Now, let's take this a step further. We're going to build a case for confluence, if you will. Okay, and inside that 30-minute level, we have a 15-minute level right down there. At the bottom of the 60-minute level, at the bottom of the 30-minute level. 30-minute level and the 15-minute level are pretty much on top of each other. And then as you can see right now, our 15-minute levels, the levels that are most important to us, the top level up above us, the bottom level down below us, these are dynamic to our market. And it says this level is high, this level is low. So if we know where high and low is, then all we have to do is trade with the trend, right? I mean, it really is that simple. If we know that the trend is up, then we can buy low and we can sell high. And I love keeping things literally that simple. All right. So I know that you're seeing this market move a little bit here, but you haven't really seen the zones work day in and day out here. So we are going to try to open up some live charts here. We're going to open up a small tick chart just so that we can see this market move. We're going to open up a really small tick chart because I really don't know how much this thing is going to move right now. I'll bring this over. And we're going to apply the zones on here. Now, we're not going to get to all the tools today, so I know this just because it takes too long to go through everything. But I just want to let you see the zones work. All right. Now, on such a small tick chart, these zones are merely support and resistance. Nothing more, nothing less. All right. But we will get to see them dynamically plot on this market, and they're going to be however big price action tells us that they should be on this particular market. It's not necessarily what you or I would like them to be, it's what the market's telling us. All right? So I think that's very important in a good understanding of how to do this. Now, I would also like to get into reading context and those type of things. But I don't know that I'll have enough time. And again, I will get into that type of stuff a little bit more tomorrow morning if you guys would like to join us for some pre-market analysis and kind of a wrap-up class to today's class. So I hope you guys will be able to join us for that. We are going to be sending out the invites for that from Twitter. Okay. So you can see price bouncing off of this zone here. It came all the way down to the bottom, and now that it's started to confirm that it is respecting that zone, we can see it taking off and acceleration to happen. What these zones really do is identify consolidation. It's just the simple truth of what's going on here. All they're doing is identifying consolidation. And if we understand where consolidation is happening, guess what should happen when price isn't consolidating? It should be expanding. And it looks like I'm cutting out here, so I'm really sorry about that, guys, if I'm cutting out. Maybe internet connection, I don't know. But hopefully everybody can hear me now. Yes, okay, good, good, good. Glad. So the idea is that these zones are identifying consolidation. So if the market's not consolidating, then it's expanding. All right. And the zones draw dynamically based upon what your market is telling us as far as those two simple concepts are concerned. Because what we will see is that as price consolidates and then expands, it puts in these support and resistance levels on this smaller time frame, or on a much bigger time frame, like let's say for a day trader, maybe a 15-minute or a 60-minute time frame. I would consider those more supply and demand type of levels. Those levels will be supply and demand. Those will be our bigger time frames, our higher time frame confluence that we are looking to achieve with every trade. And we looked at those charts to define our context. Kind of like that we saw the trender was being applied off of that 15-minute time frame. I love to take the trender off the 15-minute time frame because I too am a day trader. So I looked to this moving average to define how I look at the zone. Okay, and how I look at the trend. Does that make sense to everybody? All right, good. I'm glad it does. All right, so we'll go back to this chart here, and I'm just going to let you guys watch the zones. If you guys have any questions, please feel free to go ahead and ask. There's no time like the present to get your uh, answers and just to get in more information. I know that I haven't gone into any of the settings or anything like that. We will do that here in a little bit. But first I want to make sure all of your questions get answered. All right. So I don't see any questions here. So I'm going to dive into some of these settings that I'm sure you guys are really curious about. We do have NinjaTrader TradeStation and Sierra Charts versions. We are looking to come out with a MetaTrader 4 version as well, just so that you guys know what we have as far as different platforms. NinjaTrader is by far the elite version, and it does support the APA elements, generations, and methods packages. So it, as well as Sierra Charts, I believe, are going to have the full range of APA packages on them as far as platforms go. So as far as the settings, here is what we are looking at. Minimum zone width. So all zones have to be at least a tick big. Otherwise, it won't prot. Okay. Then data and visual settings. Those are pretty much NinjaTrader standard things. Alerts. Everybody loves alerts. So we've made both audible and visual alerts. So we can do these sound alerts only, or you can actually have the NinjaTrader alert panel also pop up and give you an alert that way too. Now, zone bounce colors, okay? Like I said before, just to reiterate this idea, all zones start off with a aqua color when they're fresh and new, and then as price bounces off of them, and we should be seeing that here momentarily off of this new aqua zone that's just formed from 62 up to 63, we should see the zone turn to a blue color, and then for each additional bounce, when price fails to break that zone, it'll turn to orange, purple, brown, and so on and so forth. Okay, so when it gets broken, the zone does not completely disappear, but it turns into a dead zone. Okay, and dead zones are in black. So if we zoom on in here, you will see that we can, on our drop-down panel, we can hit Show Dead Zones, and you can see that dead zone is right there. And you can also see the flip-flop of support and resistance coming in as price, what was once acting as resistance, now looks like it has flip-flopped into support. And again, I think this is very, very important because, supply and demand shift over time, right? Remember that little lesson in high school? So we want to be able to shift with the markets as well. And that's what the software allows us to do. And, well, it just did it for me automatically, so it's one less thing for me to do. So I hope that makes sense. Does that make sense to everybody? Okay. So I'm glad that it does. And there was actually, there's a question about time and how long to be looking at apozones as far as how much data is loaded and things of that nature. So that is a really good question. That is a question that is answered in some of the videos on the website. But how many days you have loaded determines where the zones are going to be. The more days that you have loaded, the better resolution that is. And so that we'll be able to keep track of, like on the smaller time frame, support and resistance a lot better. Okay, so because we have a better idea of context. And let's face it, when it comes down to it, trading is all about context, about understanding trend, about understanding where is high and where is low. So when we load more days on our charts, because history tends to repeat itself, the markets tend to repeat itself, humans tend to do the same things at certain times of day, like eat breakfast or lunch or all that kind of stuff, we see a subconscious or maybe it's a very conscious decision that as the markets play out over time, they tend to retest certain levels. And they tend to have the same type of market reaction, time in and time out again. So maybe it's mass psychology, maybe it's the big institutional traders. I don't know. And frankly, I don't care. Just as long as they let me play and ride along on their bus. I don't want to jump in front of their bus, but I sure would like to ride in it. So with the Epizone software, it allows me to keep track of where the big institutions can hide all these orders where they're most likely going to be jumping in because they know where high and low is. If you don't know where high and low is, how do you expect to really trade? Because you have no idea what a good price looks like. If you're car shopping, how do you know if you're getting a good deal for your new car or if you're getting taken? I'm just going to ask, you need some type of matrix to measure that. And that's really what the zones allow us to do, is to keep track of all of those prices throughout time so that we have a good understanding of where these levels are and how they're working. So you can see price just bounced off of this zone up here. It just turned around right on the tick and came right back down to our freshly created aqua zone. And you can understand from all the consolidation that just happened to the left why that level was there, because that was consolidation on a really small tick chart. But hey, guess what? It works out. The fractal works out. And don't let that word scare you guys at all. It's not that complicated. So it's just a very basic understanding of consolidation, expansion, supply and demand, support and resistance. And I think it's important that each one of these levels is a zone or an area. It's unfortunately, price doesn't always turn on a dime. It doesn't always turn on a line. Um, and I've had a hard time with things like fibs just because I'm always expecting price to turn right on the fib line. But you know what? Sometimes it does, sometimes it doesn't. I need to be flexible with markets, and with the zones, it has allowed me to be flexible. Okay, so and it can allow you to be more flexible with the markets too, because we have a gauge of understanding. Hey, you know what? Price has retested the high now up here. All right, and this is our area that we're really looking at, and we can say for sure prices failed to break high. So now we can say, is now the right time to look to make to go short? Okay, if price fails to go long, when is the right time to look to go short? Well, now we have a better understanding of doing so. So if we have 2 ticks of risk, maybe we're only looking for 2 ticks of profit or 4 ticks of profit or something like that. You know, you guys can learn more about our money management system in tomorrow's session. But let's say we just take 4 ticks back down to this next zone, to this aqua zone. So there you go. Okay, but we don't want to stand in front of the bus. So I don't really recommend standing right there on the zone edge. I want to let price action confirm that it's going to do what I think it's going to do. And that's exactly why the methods was created. Okay, that's exactly what methods does, is it gives us that price action confirmation. All right, so that's a little bit about the packages. And if you guys have any more questions, please feel free to ask. I also want to make sure that I post the link here for tomorrow's room, all right? So that you guys can register to join us tomorrow and to see all this stuff happen in real time, okay? All right, so let me put that in the questions box. And we will, actually the chat box, excuse me, and we'll let you guys all get registered for that.